Okay, test. So we have ECB coming up right now. "30 seconds size." Just started up right now, so bear with me, a bit behind. So we have the ECB rate decision coming up. It is expected to see a 25 basis point rate cut. Expectations on my side is that we see some euro upside maybe on the rate decision itself and then fading a bit. Press conference followed by more fading. Let's see. There it is. Oh, really? ECB did cut rates by basis points as expected. As we can see here, the euro has some little upside expected. Maybe a little quick to our position. Currently running like $1,000, 500. Still holding those Aussie dollar trades for more. So yeah, this is already fading. So you can see spike of the daily pivot point. Is already fading. Already back where the whole thing started. So this is really no news at all. 5 basis point cut itself. It is gonna be more about what Lagarde and possibly the others have to say about the path of the ECB going forward. As I already wrote in the channel, the outlook part, the rate cut today was not priced in just a couple of weeks ago. And then we got to the point where the European PMIs hit along with the European CPIs. Those have been pretty bad. And that's when the market was rushing to price in 25 basis point cut today, which is the second time we see a cut consecutive meetings. So going forward, there is currently one more 25 basis point cut priced in for the December meeting. And then 4 more for all of 2025. As I said, the big hint today, or the big mover for the market today, is going to be the press conference, where we probably get some hints on the path forward if the current pricing is probably right, or if the risks to the downside are a bit higher than we previously thought, or that is currently priced in. We also got US data, quite a bit of US data in 12 minutes, which is going to move the market quite a bit as well. So we have to take care of both things today. Probably something to note. ECB did cut 25 basis points across all of their financing rates. So not just main refinancing rate, but also the deposit facility rate and the margin lending rate have been cut with 5 basis points. Having a quick glance at the ECB statement itself, there is no real change. First paragraph states recent downside surprises, economic data. Is not a surprise for us because this is the why the 25 basis point cut has been priced in prior to the right early. Okay, so I think I got some wrong data out there. Let me see. So this is 122 basis points, or roughly 122 basis points of cuts priced in until June next year. So take out the December cut, 25 basis points, and we end up at roughly 100 basis points cuts next year until June. So this is actually 4 meetings next year until June. So this is 4 consecutive, or actually with this it's 5 consecutive cuts of 25 basis points. I was saying earlier 4 cuts for all of 2025, but it there's nothing else to see here. Look at the DAX. DAX is not really moving. That's quite a fascinating chart for me. So much going on in Germany. So much bad things. This is DAX chart. Not pulling back. Near to all-time highs every day right now. Well, stock market is not the real economy, right? Not representative of it. Next thing coming up in 7 minutes. Investing state. With the eye is gonna be on retail sales. Those are expected to come in at let me see, 0.3% for the September for the headline. For control group, like the core index, we don't have a forecast. Retail sales X orders is expected to 0.1% growth September. What else do we have? Initial jobless claims is quite funny. I have different forecasts for the jobless claims. Quite funny. On one side, I got 260k forecast. On the other side, I have 241k forecast. So it's quite funny. I think we're probably going to be below both. We're probably going to end up around 240, 230, somewhere in that range. I don't think the last week's spike in initial jobless claims is something that is starting off a new trend. I think it's gonna calm down a bit. It was probably just a one-off thing. Same time, we get the Philly Fed Manufacturing Index, which is expected to rise to 4.2% or 4.2 points. Sorry, it was 1.7 points last time. Expected to rise again. What else do we got? Well, continuing jobless claims is also expected to rise a bit to 1.87 million. It was 1.86 million last week. Yeah, the all eyes are gonna be on the retail sales, initial jobless claims, and the Philly Fed Index. And just 15 minutes later, press conference, Lagarde is gonna. There's a little bit of wiggle around here right now, but sideways. Bonds are pretty flat as well. Not a lot going on here. Like really. Let's prepare for some trades. Two minutes. Dixie nearly hit the pivot point, by the way. This pivot point right here is not real one. Roughly here, 30. Pretty close to it. One minute. As I said, remember, eyes on retail sales headline on the core, and also on the initial jobless claims and the Philly Fed manufacturing, in that order. 20 seconds. Eyes on dollar yen. 10 seconds. 5, 4, 3, 2, 1. Here we go. Strong. Retail sales 0.4. Strong and unexpected. Core sales 0.5. Way strong and unexpected. Yep. Jobless claims 241k. Last week got revised up a bit to 260k, but it's not a problem. Philly Fed manufacturing index way stronger, 10.3. Continuing jobless claims down as well, 1.86 million, 67 million versus the 1.87 million expected. Last week got revised down as well. Stronger data, bonds falling, as I said. This is probably the expected outcome. What's the dollar going down? That is quite nice. So yeah, the thing is, there is not a lot going on here, or not a lot that we can take advantage of just yet, because the move is already happening. We could chase it right now. I don't like this. Aussie dollar is not the best trade right here, to chase the dollar move, because stronger data is also risk positive, right? So the Aussie is gaining a bit on the crosses. At least that is what I expected it. Dollar yen, as I said, is the one that is moving quite a bit, because bonds are going down, so the dollar yen is going straight up, supported by better risk sentiment as well on the better data. Well, let's see what stocks are actually doing in an hour on the open, because the higher bond yields could really mean that risk sentiment is cratering, well, probably into the close. Maybe there is some Nvidia earning fears coming up as well. The report post close. Okay, we have some dollar selling coming up now. The question again is, does this change anything on the Fed rate path outlook? The answer is probably in the short term not. In the long term, maybe. But it just shows that the US economy is doing just fine. It is doing fine. Not falling off a cliff just yet. Remember, ECB press conference, the bigger mover on the euro side is coming up in 12 minutes. There's still a big event. The cut is now lagging on a day. majors. And the Aussie dollar is still leading. TV is down flat now. There is taking some pounding across the board as well. Yen is pretty weak. Active. Okay, so I said earlier I'm not gonna quit the Aussie dollar just yet. I mean, obviously we've been in this trade since right here after the dropped report from Australia, which should get faded because it's not too strong, so it's not alter the path of the RBA. They are pretty hawkish already. Still hawkish. Not get more hawkish than that. Expecting some fade of this move. Okay. Expecting a fade of the immediate or short-term Aussie strength. We have a new low on the euro dollar. We have cable that is back to flat on the day, or around flat. That pink line is the flat one. We have the Aussie that is holding above the pivot point. We have the Kiwi that is now below or on or red on the day. We have the dollar yen that is pressing against the weekly and the daily. R1. And in the protest we touched 150 and are trying to stay above it now. That is certainly some bigger level to watch. 150. Tried to get there like 3 days ago. It was a Monday, I think. We did not touch it, if I remember correctly, and then we was down a bit to 148.8. Let's see, dollar doesn't look like it's pulling through just yet. There is some holding back. Okay, let's check the Dixie. Dixie touched 103.75 at the highs and then backed off a bit, but we are pretty close still. Like just one pip away. We got through the daily R1 at 103.7. The trend still very much intact. The upside kind of slow. Supported by data. The next target will be the 62% Fibonacci. 8.5. Like 12 pips away. On the Dixie. There is some room to go here until we could see some pullback now. Yeah, the Aussie is not following me through now. See if we can see this here on a 5-minute chart. Yeah, you can see it pretty clearly. The Aussie has this spike down as well, obviously, but then already pulling back in the first 5-minute candle and then staying green here on the second 5-minute candle, whereas you can see the euro taking the pounding still. Cable as well. Dollar yen trying to stay above 152. It's a better risk sentiment. Cross flows. There should be some pullback on cable, honestly, right now. Off the flat level on the day, I expect it to be probably 10 pips, maybe 15, back to 1.30. Retesting flat levels on the day usually is a bounce off, short-term bounce off. So right here at the pink level, probably back here, 130. Not a trade I would take, but that's what usually happens. Okay, so if bonds are not following through, as you can see here, if they're not following through more to the downside, dollar yen might be a nice short long term of the 150. I mean, that is a big level. It is backing off now. 10 pips off the highs. Trying to accelerate. Bonds try to get back. As I said, short term Fed rate path is probably not changed a lot because of this data, if at all. Long term, it might has an effect on it. Short term, probably not. I might just take pullback. Let's wait for another push. There's probably another push. Wait. This is some interesting line right here. And this.
It's a nice drop on EU there.
Look at this trend line though.
Yeah.
Right there. Here. Again. Broke higher there. Try to stay around it. Broke higher. We're now back. and it looks like we're below it, right?
Mhm.
It is something to watch as well on a technical thing. That is not a very, very short term thing though, that is a more long term chart and above. There is minor breaks lower in the dollar right now. It is small breaks. See. Okay, Lagarde is coming up right now with the press conference. Can you mute yourself? Oh, I'm muting you, Calvin, because you actually background noise there. Okay, I'm trying to watch the press conference, but I need to figure out how to unmute or to mute it on video. Or should I just let it go? Yeah, I'm gonna mute it. Yeah, dollar is photo fading, but very interesting. Bonds are not fading right here. Like they're not going back here just yet. They're staying low, which means bond yields are still staying high. Yeah, interesting. Press conference is starting now. Going short pound here, table. This is the 10-15 pips bounce, by the way, that I said. Probably coming off that level on the day. Pretty predictable. I don't know why I don't take these trades. One's trying to bid. Watch dollar yen. Watch dollar yen for some bits. US dollar right at decision point right now. Either going back to the highs right here or fading completely. Watching Dixie. Trend remains to the upside. Still quite strong overall. Watch the dollar yen really. Watch it. It's not falling through the upside, along with bonds to the downside. No good. Looking good. Austria is looking good as well. Pound not yet. 4 hour close right now. Rip the yen. Rip the yen. Okay, Lagarde is now done with our opening statement. Now on to the Q&A. The actual really interesting part. Okay, let's go a bit more short on the euro. Again, this was the base case anyway. But I was writing about it in the channel earlier. 40s. Maybe we go down to 108 flat today. Very much possible right into this support area. It's just 35 base, 35 pips here. Let's go. Lagarde now confirms that every economic indicator and data is pointing to the downside, which is the reason why they are confident they're on track to bring inflation down to 2% in first cutting today. And she says this is confirmation and the case they are staying data dependent. She confirms they're going to stay meeting by meeting, data dependent, and that there is more data from here to the December meeting. Soft and hard data. And they're going to act accordingly to that. Same steer, same stance, same approach. Meeting by meeting, data dependency. No predetermined path. In other words, if the data is falling again and some more, they are gonna cut some more. Look at bonds, look at bond yields, look at dollar yen. It's gonna slice through 150 like a hot knife through butter. Pretty sure about that. If bonds are not catching a bit real quick, it's gonna slice through it quite easily. We're gonna see 150 and a half pretty easily. Okay. Next question. Question is why they didn't cut 50 and if it was on the table. Okay. So Lagarde confirms that there was just a 25 basis point cut discussed and proposed by Lane, nothing more. No 50 cut was discussed. But it was a unanimous decision to cut 25 basis point cut. That is the always remark. Euro selling off a bit. This. Nice. Let's go, guys. Let's go. I'll go a bit harder on it. Now the question of risk undershooting. Risks of undershooting and the risk of overshooting. Okay, let's get the euro to 108, 200, maybe 100 starting to close out. Dixie is 103.8, approaching 62% Fibonacci level, which is a bigger one. So keeping an eye on that one. The English of this order was so insane with slang runs. Euro 108, 200 right there. Approaching it. Go strong. No bids yet, but we get into over sold territory on the tech charts. So gonna stay a bit more careful here. Yeah, we sliced it through 108, 200 right here. Starting to close out some positions on the euro. One, probably second one. Here, this is nice profits. Oh, okay, closed out properly. 108, 150. We're going, guys. We're going. Taking out the cable as well. Let me see, where is it? There. One Aussie trade as well. I need to work on a couple of accounts here. So this is taking some time to close out some trades. Please bear with me. Not that easy. TV trade is not good here. Let's just write the Euro Aussie. Gonna close out. Sorry, let's just write the Euro Dollar. Close out the Euro Aussie. So there's 30 pips in profits. That is nice. Good day again, guys. Pretty good trades. So Dixie's now 103.865. It is approaching R2 on a day, and it is right above the 62% Fibonacci. I'm not trusting it here anymore. Should and could pull back any moment. Bonds are not yet breaking down either, even though I expect them to stay right low. Yeah, let's just get out flat here and enjoy this balance, and then just check back later. There's no need to chase any trade, right? Just enjoy the good ones. Your dollar is right into territory. I was expecting it to probably fall 108 100 to 108 200, as I said earlier. Right now, multitasking with a couple of accounts is not. Pull back here. Lagarde confirms that they are going to stay data dependent, not data point dependent. Reconfirming they are not pre-committing to a path in data dependent. Nothing else. Dixie pulling back off that R2 pivot point and the 6% Fibonacci right last minute. Happy to discuss with you, Calvin, and with Isaac, obviously, what is happening right here. Probably Isaac can give us a good overview of what is happening in the DAX as well.
This oil price is a good segue into your question about China.
Yeah, I was just
What
about
will
to
happen in China? What
text
kind
you
of
to
stimulus will be
explain
activated? We
the
hold full
technicals
detail.
behind the positions that you took. Because obviously I understood the fundamental aspect of it, but just a little bit more explanation on the technicals of the trades you took.
Which one though?
I guess you could start with EU.
You mean right here? Well, it was just breaking down, and it was just taking it on Lagarde and the press conference, and just on the overall fundamentals.
Okay, so did you enter based on structure, or was it like I understood the fundamental aspect, but I'm asking like why did you enter where you did?
I entered just on the momentum. I did not really look at the
Okay.
bigger structure. I also looked at the tick charts, obviously, as I always do on news trading. And there were a couple of breakdown. Then there was this little pullback right here on the pound as well, where I said it is going to bounce probably 10-15 pips off the flat level on a day. We're at the same bounce here on the euro from here to here, right? Like if you go to the 1 minute chart, 1 minute chart, you can see the same pullback from here to here, right?
Yeah.
And it's getting right into this resistance zone here as well. And then there is some selling pressure coming up here. You can see it on the tick charts even more clearly. Around 450, 480, close to 500, right? And then it's just selling pressure coming up here. And then there is this, the overall just fundamental outlook. The plan we had beforehand, before the ECB rate decision and press conference came up, was always a dovish ECB day, right? I wrote it in the channel. It is very likely there is probably some first spike on the rate decision itself because it is expected, and then fading in the press conference, and then just, you know, a dovish ECB. And also on the back of the strong US data, bonds staying low, or in other words, bond yields staying high in the US. It's just a logical trade to just get in and just ride it for a couple pips. And right here, Lagarde was just confirming that there was unanimous decision on a 25 basis point cut, even though there was no 50 basis point proposal or even discussed. But just that there is unanimous decision on a 25 basis point cut is pretty dovish on the ECB itself. So it means there was no one on the board saying no, we should not cut 25, but staying flat, right? That is just confirming that the data is worse than expected beforehand. So that is dovish. Yeah, this is it really.
Okay, makes sense. And I even noticed on the 1 minute there on EU, there was a bit of an M too. That could have helped with an entry on the pullback.
Yeah, there is. I mean, there is a structure is there as well, right? We have this pullback.
Yeah.
We have the resistance coming up on a real small scale, close to 500, like 480.
Is that a supporter? Sorry to interrupt you, but is that a support and resistance indicator?
Which one?
Or is that the moving average, the green and red?
What do you mean? What?
On EU, I see a green and red line there. Is that a moving average? Oh, I think
This
it
one?
is. Yeah. No, the other one, the green one right above it.
Well, this one.
Yeah, the orange and the green one there. Yeah.
Yeah,
Those
this
are moving
orange one
averages, right?
is the big trend line. This one here.
Oh, okay.
I mean, it's probably not in the right spot. I'm not sure if
Okay.
it's. Oh, it is. It is actually in the right spot. This is just a big trend line that is going down here.
Okay.
You can obviously put it a bit higher. You can obviously put it a bit lower. It is a bit, you know.
Yeah. It's a whole zone, yeah.
Yeah, this is not worth looking at in the shorter frames, like in the 50-minute. But it's probably worth noting it or keeping an eye on it on higher scales. Yeah, the rest on the chart is actually, like if you go to the 1 hour chart, I have the 100-hour moving average, the 200-hour moving average above it. And it's just going down here, right? Those are simple ones. And then those lines here are the pivot points. Like if it's a solid line, it's a weekly one. And if we wait until the minute finishes, the next minute is finishing in 15 seconds, then we should see dotted lines as well, horizontal lines, which are then the daily pivot points.
Okay, sounds good. I'm pretty sure this is the one that you quoted, right?
Yeah. Okay. But this are the daily ones. The pink one is the flat level on the day. So it's like last day's close level. Right? As you can see here, the day is starting here. This is flat on a day. This is the daily pivot point. R1, R2, R3, and so on. S1, S2. And yeah, the solid lines are the weekly ones. Like this is the weekly S2 already. It's not S1 but S2. S1 is here. weekly pivot point is up here. The week started here. We never got to the pivot to the weekly pivot point. We started sell off all the way through.
Yeah.
Pretty bearish this actually in the euro dollar.
Yeah, very, very strong bearish moves there.
Yeah. So Lagarde had some last comments, but I did not catch it. Please bear with me. There was some. I'm not watching it anymore.
Yeah.
We're gonna catch the headline later on. Overall, I think the takeaway from this meeting day is that they are cutting 25 again on the back of worse PMIs and CPIs and actually all of the indicators that are coming out or that came out since the last meeting. There was no proposal of a 50 basis point cut, so like just going more aggressive, front loading the rate path. That was not proposed and was not discussed, which is probably an indicator in itself.
That they're not that concerned about cutting aggressively.
Yeah, they're not yet trying
But
to front load rates at all.
Yeah. But if you put it in comparison to some of the other currencies that were some of the other economies that actually hiked rates much higher than the ECB, regardless of them now want to do a 50 basis point cut, isn't it still like worse than say the Feds? I'm not sure if I asked that question correctly, but
Yeah, I'm not sure if that is what you actually mean.
because the Feds they hiked to 5.25, right?
Yeah.
And on their first cut, it was a 50 basis point cut, as opposed to the ECB that only hiked to 4 point something. I can't remember. And they're only doing, sorry?
Yeah, go on.
And they're only doing a 25 basis point cut. So, I mean, I can understand why the Feds would cut so aggressively on the first cut, but they've also said they're only going to continue for 25 basis point, or they've hinted that they're going to continue for 25 basis point.
Yeah.
Whereas the ECB is starting for 25 basis point, are still going to continue, probably going to have to cut a lot more than the Feds. So wouldn't you rather back the? Well, I guess it's already shown in EU, but I was gonna say, wouldn't you rather back the dollar versus the euro, or currencies like the Aussie dollar versus the euro?
Well, in the end, it all comes down to where was the starting point when they started hiking, right?
Mm-hmm. Yeah.
How aggressive were they when hiking? The ECB was later, way later than the Fed to start hiking.
Yeah.
But hiked pretty aggressive then, in an effort to bring down the even higher inflation than in the US. Now about cutting, the ECB started to cut 25 basis points. They started a bit earlier than the Fed though, like a couple months. And then had one pause meeting, if I'm correct, if I'm not mistaken anything. Whereas the Fed just is just trying to front load the rate cut path. In the data, the US was holding up pretty strong. And then there was a little, it was going down last year, pretty nice until like end of the year, like till December 2023, right? And then the start of the year 2024, there was this strong bounce in economic activity in CPI and everything. So the Fed was just trying to hold back with the rate cuts because of this bounce, and they could not tell if this bounce was for real or not. So they held back quite a bit longer. But then the data really came down pretty fast as well again. Which now in hindsight is probably just a fade of this early bounce in a year. You know what I mean?
Yeah.
So in the end, they just wanna front load the rate cuts because they are pretty restrictive anyway with the high rates. Like if you're going from 5.5% to 5%, it's a 50 basis point cut, but you still end up at 5%, which is still rather restrictive, right?
Yeah.
the advantage that the Fed has is that they are starting off from a higher level, absolute level on interest rate terms. So they can cut more than the ECB and still end up in restrictive levels, which in other turns should support the economy even more. Plus, they have the advantage that the economy itself, just looking at the data like PMIs, retail sales, GDP, and so on, they are holding way better than other countries or regions like the EU is currently doing, right?
Yeah.
So there is a big advantage. I would not say that they end up cutting less. They are probably ending up actually cutting more than the ECB. But again, it's probably more a question of where do I start and where do I end up, right? Like if the ECB is starting up at 4% or 4.25, I think, right? No, was it 4.25? I think it was right 4%, right?
Let me double check.
I'll have to look it up.
I'm pretty sure it's 4.25. Yeah.
Yeah, so it's probably 125 basis points below where the Fed is starting, right? So when they are cutting down to 2%, that's like 225 basis points. The Fed could cut a whole 125 basis points more than the ECB, but end up at 2% as well, right? So, in my opinion, pre-committing or front-loading rate cuts with a 50 basis point cut at the start is not a bad decision and probably pretty smart, because first you send a signal to the market that you're going to support the market whatever is happening. And at the second time, in the long or in the second point is in the long term, you can adjust the rate cuts anyway to end up at the terminal rate at the same spot. I mean, like if you're doing 150 cut first and then 5 consecutive 25 cuts, you end up at the same thing as if you do just 6 consecutive 25 basis points, right? You end up at the same spot. I don't know if there's a disadvantage or advantage on the Fed doing the 50, or if there's actually, well, I don't know.
Yeah.
But you know what I mean, right?
Yeah, I get what you're going. Yeah.
There is some more selling on the euro dollar, by the way. New lows right here. We got pretty close to 108, 100. That is a pretty bleak chart for the euro. Not looking good.
Yeah. But I feel like I feel like EU is gonna bounce off that the low right there though.
Well, we will see. I mean, it is already 320 pips on the month. It's like down nearly 3% on the month of October, and we are like more or less just in the middle of October. Like that is pretty strong.
Yeah.
Monthly candle right there is pretty big already.
Yeah, but just look at the structure. There's quite a. It seems like a pretty big key level there.
Yeah, 108 should hold quite a bit. Like from 108 down to 107, 800.
Yeah.
Like a 20 pip zone, support zone. Well, this one here is going to be interesting. This green line here, trend line, long-term one.
Yeah.
That is coming in at 107, 750 at the moment. Right at the lows of this here, actually. This could get quite interesting. I mean, today's Thursday. Almost Friday. Is there some data coming tomorrow? I don't think so, right?
I don't think so. I'll have to double check.
Tomorrow, Friday, building permits, some FMC member, King, Waller. That's it for the day, if I'm not mistaken. There's not a lot coming. Well, I actually doubt we're gonna break below 108 this week. But for next week, it's definitely gonna be interesting. At some point, it is very likely that we're gonna get a bigger bounce. I mean, this is
Yeah.
look at this. This is straight 400 pips downside with no real pullback, and that
Yeah,
in
just
like
continue selling.
that has happened in like what 13 days. That is nothing. It's like less than 3 weeks. We have 400 pips selling off on the euro dollar. That is a lot for euro dollar. 3.5%. That is a lot.
Yeah.
And remember when everyone was screaming up here, oh, we're going back to 120. We're definitely gonna go back to 125. It's the long-term average.
Yeah. Yeah, because when I draw my fibs on the bigger time frame, I think weekly time frame, that level over there where we got diam, there seems like a pretty significant level.
Well, if we
Yeah,
actually
it does over
draw
there.
the real big Fibonacci, we draw it like this.
Yeah, it's like 61.8, right?
Yeah, and then we have here, we have the 62 Fibonacci level, 112.7. And we touched it once perfectly and then sold off.
Yeah. Yeah. So I have that whole
Never
entire
got back.
zone marked off as like my sell zone. And
Okay.
I just waited for the M to form, then I sold off on the daily time frame.
We never got back there. We probably never will. Like, just looking on a bigger scale, if the data is holding up as it is, if the central banks are going forward as it is, if the growth path is going forward as it is, we are more likely to go back here till the end of the year, like 105. Long-term target. We should actually already be there. We're not. But anyway,
Yeah.
we should go back there. And then just really long-term target for a couple of years already. We should go back to parity. I mean,
Yeah.
that is like a no-brainer, but whenever I say we should go back there, we're not going back there, but bounce off and go back to 110
Yeah.
every
Yeah.
fucking time. So yeah,
My
we will
my
see.
my thinking was that maybe what we got from last September or last October to now was just the market's pricing and everything, just to get it all out of the way so we could go straight down and over the next 2-3 years or so. Because realistically speaking, like you said, we should be down at parity just based off where the economies are headed, right? But unfortunately, EU just gets too many bounces and it
Yeah, I mean,
just
if we look at the very, very long-term chart, right?
yeah.
Here, right?
Hmm.
You see where this is going?
Yeah, it's going down. Yeah.
We've been there, right? And we always have those, like starting up here from 150, starting in 2008, it was just going downhill. And
Yeah.
it is down, finding support, going back, finding high, going down more, right? And then repeat the whole time. There was this little time where Draghi was still at the board on the ECB, Yellen was still Fed chair. Oh, we've been selling off so slowly. And then COVID hit. Couldn't make a new low. I couldn't make a new high either.
Yeah,
And
just consolidated.
this one, in my opinion, was the time in 2022 when the Fed really started to act aggressively. Well, the whole thing flipped again, and we're just very bearish on the euro and very strong on the dollar. Whatever's happening in the future, in my opinion. But yeah, technically as well, just big breakdown. Trying to get back, retest the break, consolidate for years. And in my opinion, we're just establishing, or we did establish, new ceilings or new consolidation range, quite a big one. like in the long term, right? This is like 800 pips consolidation range, nothing more.
Yeah.
If we break it down a bit and take out the highs and the lows, we have like 400, maybe 500 pips in between there, from like 111 to 106. Just consolidation, and it's just establishing sort of this high for the next years or decades to come, in my opinion. But again, the market is very dynamic. There can be a lot of factors that change this outlook, but if things are going forward as they are currently looking like, the euro dollar has, or actually the euro as a whole, doesn't really have any future as it is, just on a growth
Yeah.
and rate perspective.
Yeah.
Which is why I'm actually a bit confused why Euro Aussie is not going down more aggressively. Like it's down overall, but I'm just shocked it's not going
Euro
down
Aussie,
more. Yeah.
I mean,
You know what I mean, like it's
yeah,
down, but it's just not a not as low as I thought it'd be.
well, we have to understand why the euro dollar would move to the downside. The euro Aussie, sorry. The Aussie is just going strong whenever there is good growth in the world, and whenever there's
Hmm.
a great outlook for the next couple of years as well.
And it's pretty correlated with copper prices as well, right?
With what?
With copper prices.
Yeah, commodities in general. So whenever
Yeah.
commodities are doing good, Aussie is doing good as well. And this is obviously the correlation as well to the overall risk sentiment and world market outlook. So whenever the world demand outlook is strong, whenever everything is fine and just rainbows, then the Aussie is doing good. Whenever this is not happening, the Aussie is struggling overall. The euro, on the other hand, is still sort of in between the risk sentiment gauge, I would say. It's just between the yen and probably the Aussie and Kiwi as most risky pairs of the majors.
Hmm.
You also have to say, whenever there is some flows out of the dollar, the euro is generally strengthening. This is because, or just because, it's the second strong or the second biggest currency in the world still. So whenever there are flows happening out of the dollar, there's a part of it flowing into the euro. This is just carry trade. This is just volume. This is just, mechanical flows out and in of the euro. Euro Aussie on a rate trade is definitely short, right? Like just on a rate trade, the Aussie, the RBA is way more hawkish right now than the ECB, and there is a divergence coming up, and it's actually going stronger, I would say. Also, it's strengthening up instead of weakening down, so the divergence is even more growing.
Yeah.
At least right now. But the problem, as I said, still remains on the Aussie side, in my opinion, on the Euro Aussie. The outlook overall in the Australian economy is not good either. World economic outlook on commodities is not good, or not
good,
that good. So the Aussie dollar has some problems to rally as well.
Yeah. Okay.
On the other hand, though, it is quite confusing though with the equities and stock market, right? Like those are doing just fine. They're rallying to all-time highs everywhere, all across the board.
Mm-hmm.
But yeah, that is
Which gives a pretty misleading signal, though. Yeah.
well, that is stock markets. They are oftentimes not doing what they are probably supposed to do, or what everybody is thinking they're gonna do, and that is usually to the upside, right?
Yeah. Yeah. You could also found a major contributing factor
As when the carry trade unwinded, I think a lot of people got back into equities again after the big drop. That probably is a contributing factor there.
Into what?
When the carry trade unwinded, I think a lot of investors got back into equities after they got a discount price on it.
You mean a carry trade from the yen, or you mean a carry trade on equity?
On the yen, sure. On the yen, when a lot of investors pulled their capital out of
Yeah, I see what you mean.
equities. Yeah. So I
Well, I
think a
mean,
lot of them actually went back in. That's what's
obviously,
contributing to
yes, obviously, but still, there is, well, the problem is, as I said before, the US data is not bad either, right? As you see today, retail sales coming in stronger than expected. It's 0.5% growth month for month on the core, 0.4 on the headline month for month. That is certainly pretty good, right? That is pretty strong. I mean, that is 5% year over year on the headline, and like 6% on the core year over year. That is pretty strong, right? That is very, very strong growth. As long as the consumer is still there and picking up some goods and services, the economy is going to do fine, and then stocks are going to do fine as well.
Mm-hmm.
Also, same time, you have government spending at like what, 7-8% of GDP per year at the moment, right? You have the election coming up soon in the US, which is usually pretty supportive of the stock market right into the event as well.
Yeah. The thing. Sorry.
No, go on.
I was gonna say the thing is, if Trump does win the election, there's a lot of sentiment that a lot of people are gonna go back and invest back into the markets again, pushing inflation higher, and that's probably what's gonna cause, a pretty aggressive crash in the economy there. I'm not sure where your stance would be on that sentiment.
The problem is the election trade is always certainly a hard one to figure out. If we look at the history, let's pick 2020, which was the last one. If we look here, we've been rolling up into the election as well, right? And then just going sideways here a bit into the election, and then just rallying up after the election as well, as you can see here. That is a bit biased though, because we run right off the COVID lows, right? So we probably have to go back to 2016 when Obama had his last year and Trump won the first time. Let me see, it was right here.
Around 2016, yeah.
2016. So we had this rally as well from early in the year 2016 into the election. Got a bit sideways. And then here was when Trump won. Right? This was this week, the big candle. November, first week. And as you can see, we rallied right off it without actually any pullback for like 2 years. Right? Until end, or actually start of 2018. So it's like 1.5 years. We rallied right off it. The thing is, you always have to look at what actually happened in the market or with central banks with the rates during that time as well. So in 2016, if I remember correctly, end of 2016, the rates still been low. There was no intention to hike the rates, if I remember correctly, until 2018, right? That's when the Fed got more hawkish, if I remember correctly. I could be wrong right here, so take it with a grain of salt. But if I remember correctly, 2018 was the time when the Fed decided to hike the rates again, and that's where the market got a bit wobbly again. Trump was still president right there, right? But the market then started to go a bit sideways and even taking a dip here in 2018 when the Fed started to hike rates quite aggressively, if I remember correctly.
Yeah.
And then obviously COVID, and then just running off COVID on and after the election as well from Biden on zero rates again until 2022 when the Fed started to go aggressive on hikes again, right? And then it got wobbly again. So I'm not sure if the election itself is actually a trade in itself, or if it's just following through on the broader central bank rate decisions. You know what I mean? And this is the cycle in itself is, funnily enough, probably correlated with the 4-year cycle of the elections as well. You know what I mean?
Yeah.
So going ahead into the election, if Trump is winning, and I'm pretty sure on that, there is gonna be some movement in the market. I'm not sure though if it's the stock market. I think the bigger mover is probably gonna be the bond market.
Yeah.
Because there is a lot of fear that if Trump is winning, we're gonna get all those tariffs he's threatening to put up, like on China and stuff like that, and then inflation coming back, right? This is the fear in the market. Funnily enough, bonds are selling off in the last couple of weeks along Trump chances to win the elections, going from sub 50 to probably around 60% right now. So bonds are probably already pricing it in, at least a part of it, as well as good data in the last couple of weeks as well, right?
Yeah.
So there is I mean, I cannot say that the latest move, like from up here down here, is a good part of it related to Trump winning, chances going up. But I'm pretty sure a part of it is pricing in already some fears of Trump winning, and then a resurgence in inflation. I'm pretty sure the market is pricing it into a part of it. What would happen with the stock market? I cannot really tell. My best guess will be a quick dip if Trump is winning, probably based on bond selling off on that event, and then just rallying back again. Right. That would be my best guess, but I can't really tell. I also don't think that if Trump is winning, that we're gonna get the big import tariffs that he is threatening to do. In the end, it's just not possible to say.
You think it'll be voted against?
Sorry?
You think they're gonna vote against it?
What? Sorry.
Do you think they're going to? Because I'm pretty sure every decision he makes has to pass through what's the department called? In Canada, I think it's called the House of Commons, but I'm not sure what it's called in the U.S.
You have the Parliament. And, you have the House as well in America, and you have to pass it. Every legislation has to pass that. Well,
so that sounds. Do you think they're gonna vote against it?
It depends if the Republics have a sweep or not. They probably have a sweep. But first we have to see the actual election taking place, because I still think honestly without conspiracy theories or whatever coming up here, I still think that the Democrats are not going to lose it. I still think that Kamala Harris is going to win the election. If it's fully democratic and without influence, is something else, right? But I still think Harris is going to win this, even if the chances right now for Trump winning in the polls are showing probably between 55 and 60% chance to win it. If the Republicans get a sweep in the House, Trump is winning, then he probably can get the tariffs done. But he just wants to have the tariffs done if there is a complete removal of the income tax, right? If I remember it correctly. So he wants to have it like income tax going away, but instead tariffs going up. So to fund the budget with the tariffs instead of the income, right? That was his proposal during the campaign, if I remember correctly. Please correct me if I'm wrong. You simply cannot do that. One, because the tariffs would not make up the income tax. That is one thing. Second, would completely swipe out the whole economy if you put up like 70, 80, 100% tariffs. It's not gonna happen. You just destroy the whole economy. And third, you probably can pass the tariffs, but we probably can't pass the removal of the income. So there's probably two things that
they're gonna be voted against
at the same time, and one is probably not going without the other. What can happen though, and what I could imagine that he is gonna do, and probably can do, is not going as far as saying, okay, remove the income tax as a whole, and putting up the high tariffs instead, but more like going a middle way, saying we put up import tariffs, not as high though as like 70%, but probably like, I don't know, 10, 15, 20%. And same time lowering the income tax or whatever other tax there is, right? So this is a path I could imagine that he could go and actually get approved as well. If the Republicans are having a sweep, if they're not having a sweep, if there is indecision in the House or whatever, if it's part of it, then it's very likely that he's not gonna achieve anything big in his last his last part. The same is true actually for Harris, right? Like if she is winning, it's very likely that the House remains Republic. It would be a split. Very, very likely. I don't think at all that she's gonna achieve anything big, even if they have a sweep, a Democratic sweep. But if it's a split, it's gonna be like just a bad situation, and nothing is gonna happen.
It's a battle of the wills.
Nothing. It's gonna be complete political deadlock.
Just a complete battle of the wheels. That's all it is. I get that. Well, I don't think Kamala's gonna win. I don't really think so.
If I'm not following both campaigns in detail, but the couple things I saw from the Kamala campaign, cringe, horrible to watch. Not really, how should I say, following one clear direction and path where you say, okay, this is a political direction she wants to go, but it's more like just trying to get content out to win every possible voter without actually getting any political standpoint out, right? So like there was this Black Man campaign, and then the Man campaign itself. That is just horrible to watch, man. It's just cringe. But well, the Democrats still have the whole media machine on their side. And probably most of the big supporters in terms of money as well. I'm still not sure if the Republicans actually have a chance at all, honestly. But I don't know. I don't want to go into too much details on the politics. So I'm just trying to be as neutral as possible here and not trying to predict the future.
Yeah. Yeah, I hear that. Just
In another note, Austria's political landscape is still the same. The right wing won parliament election, the general elections, like 2 weeks ago, 3 weeks ago, 2 weeks ago, 3 weeks ago, and there is still no task given out by the president to either party to form a parliament yet, and it's like 3 weeks, 2 weeks or 3 weeks out, or
yeah.
which is just fucking shit on a democratic standpoint, because it was best practice in the history that the leading party in the general election, so the winning party, is getting the task to form a parliament with the other parties if they don't have an overall majority, like more than 50%, right? So they get the task from the president to form a parliament, and it was best practice that this is happening like a couple days after the general election, just to save time, right? But as it's the right party that was winning, they are holding back, not giving them the task, which is from a democratic standpoint, in my opinion, right? Like if the party is winning, just give them the right to form or try and form the parliament, right?
Yeah.
Would make sense, but it's not happening
Yeah.
for whatever reason. Talk about double standards. Let's just imagine the left wing, the green ones, as an example, would win, but the president would hold back to give them the task to form a parliament. Would have probably a civil war starting up day after that. Right?
Yeah. Yeah, politics is just I don't like politics, man. It's too greasy and just sometimes it's just very immoral. I don't like it. It's just very, especially when you look at undeveloped undeveloped countries, man, the extent that they go to just to win, presidencies and stuff like that, it's ridiculous. Especially like if you go back home, like in Nigeria, like in other parts of Africa, where some people get killed for political gain, and just I don't like politics. Just hate it so much, man. Just there's nothing good comes out of it.
I'm always trying not to get too involved in politics. At some point, well, as trader, you have to at least know what's happening on the world stage.
Yeah.
Also probably on a more local stage region. Yeah, I mean, it's awful. Politics overall.
Yeah. I don't like it. I don't like it at all.
Well, I think this is it this is it for me on the day. It was pretty good. It's 4 p.m. There's 1 hour till the London fix. Made some good money today. ECB is done. Dollar data for the US data slate. Well, there's nothing more coming up today if I remember correctly. The Dixie is now consolidating a bit between the R2 and R1 on a day, 103.87 and 103.7. 62 Fibonacci level at 103.85 is up there as well on the highs. I think we're just consolidating probably here. Maybe we have a pullback back to 103.5. That would actually be negative on a day. Could happen. I can see it happen. Depends on bond yields as well. They are not looking to break a lot lower right here, as you can see. Yeah, there's nothing much happening right now. I think I close it down. I enjoy. Hey, take care, guys. See you next time.
Yeah.
Bye bye.
Right.